Hello everyone, welcome back to Gary's channel. Today we are going to dive into a question many Canadians have been asking. Canada and Australia are similar in so many ways. So why is Australia's housing market doing so much better than ours? Both are wealthy, immigration-driven, resource-rich nations. Both faced the same pandemic boom and the same interest rate shock. Yet in 2024 to 2025, Australia's housing value kept rising, while Canada entered a period of softening prices, lower sales, and cautious sentiment, especially in Ontario and the Greater Toronto Area. In today's episode, I will break down the shared foundations between Canada and Australia, where and why their real estate markets have diverged. We will deep dive comparisons across geography, demographics, economics, immigration, interest rates, supply, affordability, and investor psychology, plus our 2026 forecast for Canada and the Greater Toronto Area, GTA in short, including their prices and sales. By the end, you will have a clear mental framework for understanding why Australia is outperforming Canada now, and what realistically lies ahead for Canada and the GTA housing market. Let's begin. We have 9 sections to explore. Section 1, Similar countries, different outcomes. Canada and Australia share many structural similarities. Number 1, large land mass, low population density. Number 2, heavy reliance on immigration. Number 3, global education hubs. Number 4, resources and service-driven economies. Number 5, high home ownership culture. Number 6, strong international student markets. Number 7, coastal or gateway cities dominating economic output. But when the pandemic ended and interest rates started rising, the housing outcomes diverged sharply. Australia, prices rising in many cities, tight rentals, and strong investor participation. Canada, price stagnation or decline in many regions. Lower sales, cautious consumers, and weakened developer confidence. Why? Let's break it down. Section 2, Geography and urban patterns. Australia's population clusters in warm, coastal, global attractive cities like Sydney, Melbourne, Brisbane, Perth, and Adelaide. Canada's population clusters in colder, high-cost metros like Toronto, Vancouver, Montreal, where first, weather is harsher. Second, commuter distances are longer. Third, infrastructure struggles to keep up with growth. Yet fourth, economic hubs and proximity to US borders. Australia's climate and lifestyle advantage attracts migrants not just for economic reasons, but for lifestyle. Their coastal capitals are destination cities, which concentrate demands into extremely limited land supply. Canada also concentrates growth, but into markets where affordability was already stretched long before rates rose. Section 3, Population growth and migration pressure. Both nations rely heavily on immigration, but the effects differ. Australia, strong net migration, growth focused in high-demand, lifestyle-driven capitals. Migrants integrate quickly into rental and purchase markets. Investor sentiment remains confident, and Canada, population growth reached historical highs through 2023 to 2024. Over 90% of growth came from international migration. Sudden surges strained housing availability, pushing rents up. Policy uncertainty weakened buying sentiment. Federal government significantly tightened temporary residence inflows. What are the key differences? In Australia, migration fuels market momentum. In Canada, migration has created pressure but not necessarily transitional demand because buyers are constrained by affordability and policy shifts. Section 4. Economy, jobs, and confidence. Both countries face cost of living challenges, inflation persistence, and high household debt, but consumer psychology differs dramatically. In Australia, people still believe strongly in long-term property growth. Investors remain active. Home ownership culture is deeply embedded. Cities like Brisbane and Perth have become rising stars. While in Canada, confidence is fragile. Consumers worry about employment, affordability, and policy volatility. Many households face mortgage renewals at higher rates. Sentiment is cautious even as rate falls. Economic fundamentals matter, but confidence drives real estate more than any spreadsheet. Section 5. Interest rates and mortgage structures. This is one of the biggest differences. In Australia, cash rate remains relatively high. Markets expect limited cuts. Australians accept variable rate mortgage as normal. Price growth continues despite the rate environment. In Canada, Bank of Canada has already cut rates significantly. Mortgage rates dropped from the peak, but Canada's mortgage cycle is short. Most borrowers reset every 3 to 5 years. The shock of sudden rate renewals have weighed heavily on sentiment. Canada now has lower interest rates than Australia, yet a weaker housing market. Why? Because Canadians are still digesting the trauma of rapid rate hikes and payment shocks. Section 6. Housing supply, developers, and inventory. In Australia, severe rental shortages, limited new housing supply, strong investors' appetite. Cities like Perth, Adelaide, and Brisbane have extremely tight market. In Canada, construction is slowing dramatically. Developers are canceling or delaying condo projects. Pre-sale activity weakened. Materials and borrowing costs remain high. Policy uncertainty, such as taxes, changes to foreign buying rules, UHT discussions has hurt investment appetite. This is critical. Canada is underbuilding at the exact time when it needs new supply the most. This creates long-term pressure, but short-term market stagnation. Section 7. Rentals, investors, and affordability. In Australia, extremely tight rental market. High yields attract investors. Rents rising faster than incomes. Migration flows directly into tight supply. In Canada, also tight rental markets, but heavy tax and regulatory changes have cooled investors' demand. Renters feel squeezed, but cannot transition to buying. Investors worrying about policy risk. As a result, Canada's rental demand is strong, but purchase demand is subdued. Section 8. Market performance, 2024 to 2025. In Australia, number 1, national price rising around 6% year over year. Number 2, sales above 5-year average. Number 3, Brisbane, Perth, Adelaide are standing out performers. In Canada, number 1, National price expect to fall modestly in 2025. Number 2, Ontario and BC face deeper downside. Number 3, GTA, sales down, listing up, price down 5 to 7%. The divergence between the two nations is now undeniable. Section 9, Outlook for 2026. Number 1, to Canada 2026. First, we shall see beginning of sure recovery. Second, prices could rise 1 to 4% nationally. Third, sales should return toward the long-term averages. Albert, Quebec outperforms. Ontario recovers more slowly but steadily. Number 2, to GTA 2026. Firstly, we shall see 3 to 5% price increase. Secondly, market will have a slow and steady recovery. Thirdly, confidence will improve. Lastly, inventory could tighten due to lack of construction. This is not a boom, but a stabilization followed by a gradual climb. In conclusion, let's tie it all together. So why does Australia look stronger than Canada today? Because migration confidence, rental shortage, and investor participation are translating directly into price growth, while Canada is dealing with affordability scars, policy uncertainty, and a developer retreat. And 2026 will likely mark the beginning of a measured recovery, but not a surge. Alright, that's it for today. I would really like to hear your perspective on this topic. What stood out to you? Share your thoughts in the comments below, as your insights often inspire our future episodes. If today's video brought you any clarity, value, or new ideas, please take a second to like this video, subscribe to our channel, and turn on the notification bell so you won't miss our upcoming videos. In a world that's noisy, emotional, and often short-sighted, my goal is to give you a bit more clarity, confidence, and strength in your own decisions about life, finance, and real estate. Thank you very much for watching. I'm Gary, and I look forward to seeing you in the next episode.